Hi everyone, welcome to another episode of Deal Digest with Fibonacci X. This is a bi-weekly discussion we do with our team members on the deals which have happened. There is a separate deal alert which goes every Monday morning, usually from us to all the investors in our network, all the founders, summarizing what has happened across the startup ecosystem throughout the week. So we are dividing deals by stage. So late stage, growth stage, early stage, and we try to add some flavor. Okay, why has a particular company raised money? What is happening with their business, etc. So every 15 days, earlier we were doing it every week. Every 15 days, we'll bring this to you where we try to dissect some of the themes, some emerging areas, what are some of the learnings which we can share with you as a team. So we'll try to make it regularly going forward. So let's start.
Okay. So in the last 2 weeks, 43 startups have raised funding. Three startups have raised in the late stage, which we have defined as startups who raise in the pre-IPO stage. Six startups have raised in the growth stage, that is from Series B to pre-IPO stage. And 34 startups have raised in the early stage, that is all the funding prior to Series B. So we'll be starting with the late stage startups. So the first one that we'll be talking about is Rebel Foods. So Rebel Foods has raised approximately 210 CR from Qatar Investment Authority at a valuation of approximately $1.4 billion. They currently have around 400 to 450 cloud kitchens across India, MENA region, Indonesia, and UK. In FY24, so they have generated a revenue of approximately 1400 CR with a growth of 18%, which in FY23 was around 1200 CR.
Okay, so how much is the revenue which you're quoting?
1400 CR.
Okay, so I was just, I found an interesting episode which Jaydeep Burman, their founder, has done on First Principles, which is a podcast which I recommend to everyone who is watching or listening to us. And that's an episode, I think he has done a couple of episodes in which he actually deep dives into their business, right? So it's a pretty much fairly scaled business. They have about 7,000 employees. Now this episode is a bit dated, but he quoted we have 3 million orders. So 3 million daily orders is what Rebel Food is delivering at this point. 150 CR MRR, so monthly revenues around 150 CR. Another fact which will be interesting that they have already raised about 3,000 crores in debt and equity till date, which is almost like half a billion. I think the last valuation was around 12,000 crores, which is roughly 1.5 billion. This round may have changed, right? I'll come to the business. Let me share the cap table from the last round, which is interesting. So if you see, most of it is with the investors. 6% is the ESOP, and the founder and others own only 13% of the company, right? So this is what happens, right? This we saw even with Zomato IPO, right? Before this was a similar kind of shareholding pattern we saw, right? So a lot of them are, we have sovereign wealth funds, you have Sequoia, which owns, I think, roughly 14%. I think that's the largest shareholders. So this is I don't know the shareholding after this round, but this was, I think, in 2021, October, when they had raised their Series F, right? Most of the pointers I'm going to talk are from the founder himself. An interesting insight which he had about travel and food. If you look at other industries, let's take fast fashion, a lot of them own the back end of the industry. So they own the manufacturing, right? So let's say if it's front end, but they also start investing into the back end, which is the manufacturing facility and other things. Food and travel are the two industries where players have not been able to own and operate the back end. So Zomato does not own any restaurants, right?
Mm.
And Make My Tree does not run any hotels. right? So these are the two industries which you mentioned where the back end has been very separate from the front end aggregators, right? Other industries, usually people start going vertical, let's say even in, let's say, quick commerce, right? Now we see Zepto investing into or sourcing directly from farmers, which is like vertically moving in the supply chain, right? But in food and travel, because the operations are very, very complex, if you're an aggregator, you don't want to touch that. Running a kitchen is very different from being an aggregator like Zomato and Swiggy, right? So this was interesting because now that you think about it, you don't know, have any example, right? Where any travel company is actually investing into hotels or any uh, food aggregator is investing into cloud kitchen. So that was interesting, right? So two industries where retailer does not own the backend as travel and this thing, right? Other thing, what I found interesting is he has positioned the company as an operating system. So they continue to produce new brands, right? It is probably the only company which owns two brands of biryani and you don't even know about it, right? Different price points, and they're selling you biryani through two different brands, right? Which is very counterintuitive because a lot of time, if some founder comes to us, we'll tell them, okay, don't do competing brands, right? No, it doesn't make sense. But for them, because they are at that scale, right, they can do it. And I think it's like an operating system, and then they have mastered the playbook of replicating cloud kitchen infra. And on the front end, they have mastered the playbook of launching new brands, right? So many of our brands, so they own, by the way, they also own the master franchise for Wendy's in India. People won't know about it. So Rebel Food owns the master franchise for Wendy's also, right? They, I think, also have licenses of some of the content for Disney, I think, for entertainment, some licenses which they have acquired, right? Um, there's a beautiful two by two. He mentions about three two by twos when he's talking. So it's like a 3 hour conversation. And I got to absorb a lot about how to launch these kind of brands. So one of the framework he uses, how and which segment he should launch a new brand or the company should launch a new brand. So there's a two by two for which they use. So on x-axis you have the size of the market, so you go from small to big, and then on the y-axis you have the competition, low to high, right? So if you are high competition segment with big market, high competition and big market, you build your own brand, right? That's how they go about thinking about it. If it is big market, low on competition, you should acquire a brand as a food operator instead of trying to bring, because that means there will be very few, because the competition is very low, so you can easily acquire a brand, right? If you go to the small size of the market, those two quadrants are anyways not attractive because the market is small, right? So the only way they think about is either we should build. So on the big market, high competition, think about biryani, wraps. These are the segments, right? So these are huge. TAM is huge. Plus, there are a lot of people who are already doing it. So there he recommends you should build your own brand rather than acquiring a brand. While if TAM is big and the competition is low, you should partner. Right? This is his framework. You don't have to go by it, right? Um, then there are a couple of other frameworks which he talks about overall India F&B market. So on x-axis, let's have a small market to a large market in terms of total F&B market. On y-axis, you have supply. So ample supply to constrained supply, right? So India is a large market with ample supply, right? So India and Saudi Arabia, and US is large market where the supply side is constrained because a lot of new players have not entered the market, right? So global two by two, this is what they're using. Which markets should they enter on? Now coming to what are the implications of this kind of deal, right? I would say for me, if they're looking for IPO. That will be interesting because I'll be interested in what kind of exits happen because they're already valued at 150 CR MRR and they're valued at 1.5 billion, which is their last valuation. So roughly 6,000 crores, or so multiple of roughly 4 to 6x. That's where they were at the last MRR. So it will be interesting how does and when does the IPO listing happen. Second will be, I think this is a fairly scaled business where cash flows are predictable because they have the kitchen level numbers for new brand, like what is the journey of a new brand, right? So that way it's more like a established company, less like a startup. But they continue to enter new markets and explore new market. Like I said, 90% of the revenue comes from India and 10% from outside India. So they're exploring other countries like South America, Brazil. I think US also they must have explored. So it's an interesting company. It's an interesting company which has really succeeded in building that launch pad for new brands. Right. So many brands are there on Swiggy and Zomato from Rebel. You won't even know about it. Whoever is listening to it, just go and Google like how many brands do they own. Right. So chances are in last 1 month you have ordered, if you have been ordering from Swiggy Zomato, you have already touched one of their brands. It's very rare that you have not, whether Behrouz, where the Fasos, or you may have touched one of those
Common
brands
story.
recently. Yeah, yeah. So many. And they have even shut down brands like nobody knows about. They have experimented with so many pizza brand, other brands. So they are very, it's a good story. It's a good story. Again, the founder has a very long term mindset, and I mean probably him coming from INSEAD and McKinsey probably has helped him in developing those mental models. But I like the way he thinks about businesses. He's thinking about IPO, etc., etc., right? Um, so yeah, interesting story. I'm very happy that they're going for IPO. A lot to learn from this, I think. I am recommending those 2, 3 episodes he has done on First Principles podcast for anyone who is planning to get into cloud kitchen. Just listen to those, and I think a lot of these frameworks are already given. Like how should you think about F&B? How should you think about launching a restaurant business, brands, etc. So that knowledge is available for free on Apple Podcast and other forums. You can just explore that.
I
All
think
the
what is really interesting is that apart from him being a very good at positioning his brand with the price point and the marketing, is how he entered industry where 95% of traditional restaurants or QSR used to fail. Like I see in my own city, a spot is there on a fourth floor having a restaurant. After 6 months, it'll be a different restaurant, but same owner. The industry fails very quickly and very fast. For him to be able to come from I think, a consulting background really helped him nail the unit economics, I would say, because here the food wastage is very high and that impacts your bottom line. So, and what is very interesting, if you look at the Fasos and One Story and a lot of the brands that he has, usually they have 2, 3 brands centered in one kitchen. That helps them to reuse the ingredients in one product in another product. So food waste is very low, and for him to be able to come up with these kind of concepts way back, like few years back, when we were just dealing with having a multi cuisine restaurant, people trying to establish high-end restaurants, and he coming up with this kind of concept is really interesting because he saw through it. He saw through the economics. He understood what the business numbers were supposed to be. How could we bring that by adding various factors into play? Like that is really ingenious of him. Like I think nailing the operations is what is even more uh, commendable, I would say, in this kind of industry.